Do they really operate in a vacuum? Will they really have no competition? Because that's the way the stock's being valued.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm going to be reacting to some clips of my favorite Tesla stock bear/closet bull, Craig Irwin. I sometimes wonder how Craig can say some of the things he says with a straight face. And honestly, sometimes he can't keep a straight face. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Tesla's starting to trade in the S&P. Its market cap over $600 billion. That makes it the 6th largest company in the S&P. For more on this, we want to bring in Craig Irwin. He's a Roth Capital analyst. And Craig, great to have you on the show. Let's just start with Tesla's performance so far today. We have shares off just around 5% right now. So we're under a bit of pressure. Just what do you think today as it heads into the S&P and what this means for Tesla going forward?
So obviously the buy side is treating this as a negative catalyst, and all the funds, the index funds that have the opportunity to accumulate in advance of an index addition have basically done so. So many of the funds will be on the sidelines waiting probably as long as they can to accumulate the rest of the shares they have to. Some of them have a month, some of them have a full quarter. And yeah, it's $80 billion gross in buying, but you know, the catalyst is over. And now we have to look back to, is Tesla actually executing? You know, it's being valued as a well, I'm thinking teleportation company, but really autonomous company, full self-driving company. And, you know, are they really executing there? If you look at the videos online from the different users in the betas, I wouldn't say so. I think it's very buggy.
These kind of comments are typically a great tell for somebody that doesn't really understand how neural networks and deep learning work. For those of you who haven't been paying close attention to the full self-driving beta release, the rate of progress is really impressive, and that is the thing that matters. It's not where things are starting from. The rate of progress towards that end goal, that is what matters. That is accelerating. Watch the videos, see the updates from the people using the full self-driving beta for yourself. Watch the improvements. Listen to the narration over some of their videos explaining when it used to go here, this happened, and now this happened. The progress is very impressive if you understand it relative to how deep learning and neural networks work. This is very important.
So I would agree with the last guest that we probably have a bumpy ride in 2021.
Craig, it's Brian Chung here. I mean, if you wouldn't put past Elon Musk, maybe they will be a teleportation company.
Lol. I think the closest thing that Elon Musk will be doing to teleportation is the boring company tunnels.
At some point, at least an aspiration. But I want to ask on that point then, if the argument is that the news was bought when the index was going to add Tesla as opposed to the day where it actually joined, what's explaining the sell-off going on right now? I guess, well, not sell-off, but 5% is pretty noticeable. What's going on there?
Before Craig answers this, I just want to refresh your memory. 10 days ago, I posted a video, a warning to Tesla stock investors that I thought the most likely, not certain, but most likely outcome would be a little bit of a pullback. Here's what I said 10 days ago. I do not know what is going to happen. I do not have a crystal ball. I'm just trying to think through some of the likely outcomes here. My best guess, and this is all it is simply a guess, is that Tesla stock is going to pull back sometime before S&P 500 inclusion or soon after, or both. And if you guys remember, what actually happened is on Friday afternoon, Tesla stock began shedding some of its gains and then spiked literally in the last fraction of a second and closed at 695. Then continued to decline a little bit, opened down on Monday morning, and has shed a little bit more since then as well. This isn't surprising.
So this is not a surprise. This is something that's been known about for several months. So you see surprise moves to the upside on surprise additions. This is something that's been thoroughly hashed and rehashed and dissected and redissected. And you know, I think it's behind us. So at this point, we move back to fundamentals. How big is this fourth quarter, and does it matter for, you know, this being a $600 billion market cap company, you know, more than most of the global automotive producers combined? Do they really operate in a vacuum? Will they really have no competition? Because that's the way the stock's being valued.
Look at Craig there making the bull case. He's hit the nail on the head. Tesla is effectively operating in a vacuum without any competition. As I've mentioned in the past, there's a few steaming piles of shit and a few promises and claims that competition is around the corner from some of these automakers with their imaginary specs for their imaginary vehicles that don't yet exist, that aren't yet in production, that aren't yet in customers' hands, that are coming in a few years' time. But at this point in time, he's right. It's literally a race of one, and Tesla is absolutely dominating.
And, as I've been saying for a long time, I think people are better off in a variety of other alternative names throughout the EV universe.
I'd love to know why Craig has this opinion about some of the other EV stocks. Is it because he actually has identified some enormous potential, great execution, incredible leadership, impressive technology, etc.? Or is it a possibility that he just doesn't understand / think the Tesla stock price is reasonable and therefore by default is suggesting people look at the other EV stocks? This is a mistake I think a lot of really dopey retail investors are making as well. Now, I know there's some people out there that have done their research and their homework and really believe there's a lot of potential. But let's be honest, there is another very large slice of the market investing in these EV startups, not because of the business that they're investing in, solely because they think that the price of Tesla stock is too high, or they feel like they've missed out on the opportunity, and they're hoping, they're wishing to get onto the next Tesla. As I've said a million times, in my opinion, Tesla is the next Tesla. Anyway, let's move on.
Craig, going back to what you said before, just about volatility, I think the question going forward, yes, we're probably going to see swings like we are today in the stock, but the degree of that volatility, do you think Tesla is going to be as volatile as it has been in the past now that it's in the S&P?
I would expect so. I mean, S&P will smooth some of that out, but this is a name that retail loves, and a ton of the managers on the buy side love this, right? Many of them don't necessarily own it in their funds; they own it in their PAs, so they're kind of maybe behaving a little bit like retail.
Now that was a very interesting point from Craig. He's under the distinct impression that a lot of managers on the buy side actually own Tesla stock, not necessarily in the fund that they're associated with, but in their personal accounts. Something worth pondering.
It's a trading stock, so it's a darling. It's a name we love to talk about. It's one that's always entertaining. Mr. Musk is a big personality, so I think the volatility stays. And I think things that come out on Twitter and from competitors and from the whole spectrum of sources of information are likely to continue to drive good volatility in the stock. I just think, overall the trend is likely to turn a little bit negative in 2021.
Craig, let's talk about financing for Tesla. I mean, the story about them getting added to the S&P 500 with the S&P's criteria about profitability is a bit, I guess, of a vindication for their performance. But at the same time, we know that they have a lot of outstanding debt.
Now, I hate to be that guy, but I am that guy. Relative to other automakers, Tesla has almost no debt whatsoever. Relative to its own market capitalization, almost no debt whatsoever. And funnily enough, Tesla recently sold $5 billion worth of stock and told us that they're likely to use some of the proceeds to eliminate all of their outstanding debt.
You've listed refinancing and repayment as a risk facing their business model going forward. What's the status and where you see their financing angle of things going forward in Tesla's story?
I don't see any issue for Tesla around financing. I think if they want to issue equity for plants or expansion or new investment initiatives, there's going to be no hesitation from shareholders. I don't think there's any issue at all for them to raise debt at rock bottom levels. Tesla has a lot of options because of their technology leadership, their aggressive first mover position.
Craig is definitely Wall Street's most bullish Tesla bear.
But it's opening the door for a ton of other companies in the whole sector to pursue financing at attractive rates. And that's why we're seeing so many of these SPAC IPOs. That's why we're going to see many more interesting things in autonomous and related technologies in 2021.
Craig, I want to bring up something that you mentioned here in your latest note. You said that future growth in Tesla's sales depends on consumer adoption and acceptance of electric vehicles. I'm curious just what you believe to be the potential adoption rates for Tesla going forward, and then some of the challenges that the company could face because of that.
So I am on the conservative side versus my peers out there, right?
The guy can't keep a straight face. I think in the back of his mind, he knows these are going to be very embarrassing clips to rewatch in a few years' time. Let's watch that again.
So I am on the conservative side versus my peers out there, right? I've been watching EVs for many years. I worked in the battery industry many years ago. And, I think if you take some of the more conservative groups out there like Ward's Automotive, you're looking at single digit millions of EVs within the next, give or take 5 years.
Ooh, that was sly from Craig there. Maybe I'm reading into the tea leaves a little bit here, but I have a funny feeling Craig has just intentionally disassociated himself from the prediction here. Rather than saying, I expect this many EVs, he's actually talked about some of the more conservative groups and then named them, basically saying, here's their prediction. It's almost like he's associating himself with the prediction without actually saying that that's what he believes. Again, I could totally be reading into the tea leaves here, but in either case, this is going to be pretty embarrassing in 2025, I'm telling you now.
There are others out there that forecast, things in the 20s or 30s. I think this industry will be wildly successful with, say, 5 to 10 million EVs sold. If that's the case, Tesla has a strong ramp ahead, but maybe not as steep as many would want. And let's remind ourselves, that Tesla's having a hard time making their 500,000 unit bogey for this year.
Do you mean the target they originally set in 2014 for 2020, the one that they reiterated again at the end of 2019 and are on track for despite a pandemic? That bogey.
They're doing everything they can. They very well may make it, but it's only 500,000 units, and it's a 60 million unit global market. They're still a very small piece of the pie.
This is exactly why Tesla is so exciting, because of the amount of growth ahead of them and how obvious it is that they will be able to achieve this growth. They're so far ahead of everything else attempting to compete with them that they've got a very clear run for the next 5-10 years. They're going to take an enormous outsized chunk of the EV market. Never mind autonomous vehicles, never mind battery storage, never mind any of that. Just talking about vehicles, they're going to be dominant. We can see clearly now. That means that the growth ahead of them is phenomenal. This is why it's so exciting. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.